probably the biggest thing that everybody everywhere in markets should be paying attention to this week is the Fed is having an open markets committee and is expected to raise rates. And I strongly encourage everybody who's interested to read this piece by our colleague Omkar Godbol, who did a great rundown of all of the factors going into this meeting. Basically, we have an interesting situation where there have been some signs of cooling inflation, but there's still a lot of consensus that the Fed is going to do a 75 basis point or 3/4 of a percentage point hike, which is quite a bit. And Omkar highlights some interesting stuff about that sort of conflicting set of trends or indicators. And obviously, rising interest rates have implications for crypto, which is a speculative asset that could be hurt by rising rates on things like Federal Reserve notes. So lots to think about, lots of interesting signals. We could wind up a little bit under the projection. Most likely we're going to get 75. But Will, what are your thoughts about inflation ahead of this meeting? Will?
Oh,
okay.
I think we lost Will there, so I'll take it away. I mean, David, my question, I really have a question for you. For people who are just getting into crypto, maybe in the last year, they got in via, NFTs or whatever, and they're just still kind of figuring out the markets, what should they be taking away from this?
I think it's really kind of simple and huge, which means that it's easy to understand, but the implications are hard to totally suss out. But very high level, higher interest rates, which are being pulled up to fight inflation, do have basically broad negative implications for speculative stocks or assets of all kinds, because the rate of return on low-risk assets goes up relative to the rate on higher-risk assets, and so people just pull money out of things like startup stocks or crypto, and move some amount of it into Fed treasuries, things like that, and so that has an impact. The other thing that I would note for people, and this is for experienced people as well, but in crypto, one thing that I've noticed over several years is that whereas an equity market might be thinking ahead, perhaps, people who are trading stocks kind of know the impact of these decisions ahead of time, and so they might already have priced in that change. In crypto, that doesn't always seem to happen. Sometimes we will get a big price change on the day of an announcement, even though that announcement was expected. So that's something else to keep in mind. But do we have Will back? Will?
I think I'm back.
I'm here.
No, I think I'll take off.
I think I'm here, dude. I'll go back to your original question, though. You asked about inflation and how I see it. That's my favorite thing about being on the hash and being in Bitcoin in general is all of a sudden you become an inflation expert. The rest of these schmucks at the Fed, they have to go through tenure. They have to be like an academic for 40 years. And then they get to have an opinion. We don't have to deal with that, right? We can just talk about it whenever we want. So here we are.
It's a win-win.
The power
on this topic.
We have. The power
I know, right?
Have.
It's pretty awesome, right? It's pretty awesome. 1.75%. That's the federal funds rate as of right now. At the beginning of the year, it was much lower than that. I think it was around 0% to like 0.5%. And the Fed has increased the interest rates the fastest it's done in history. So back to the 1980s is the last time we've kind of seen a similar timeline, but fastest in history that we've seen to date. And they're continuing with that trajectory, right? Another 0.75% increase or even a 1% increase. That moves us to like 2.5% or 2.75%. And that's moving up the cost of money, the cost to borrow money. And for entrepreneurs out there who want to borrow more money to get their projects up, it means that you have to price in the cost of that interest going forward. But for debt assets out there, that's even worse, right? Because all of a sudden the cost of the debt, the cost of the borrowings that you've made in the past, Those things have to change. And they've changed because the macro conditions have changed. And maybe you don't have that money to pay off that interest into the future. So you have to change everything about your own product. And that's where people get into this worry about recession, right? Because if I can't pay off my debt, then maybe my business collapses, or maybe I have to lay off that person, or maybe I can't make that new investment for my business to keep working. So the Fed is trying to walk this tightrope, right? Because you have to keep the economy rolling and moving, but you also want to bring down the cost of goods. And there's this connection between the interest rate and the cost of goods within the minds of many economists. And that's what they're trying to do. I don't want to lay off that person, but I want to bring down the cost of that candy bar to like a normal level so I can go into a store and buy it and not have to walk out without it. Jen, I'll throw it back to you for your take.
Yeah, I guess a little tidbit I want to add in here. Although we have these macro conditions that we've been speaking about, from a crypto perspective, we're still dealing with the I guess you can call it downfall from the contagion we're seeing from Luna. There's also increased regulatory scrutiny, as we saw with the, I think it was 9 cryptos outlined by the SEC in the Coinbase insider trading scheme. And so I think while there are macro conditions, there are also conditions that are very specific to the industry that is affecting the price to keep in mind. But David, I will give it to you for last thoughts.
Yeah, I guess the other thing that I think ties a lot of this together is that obviously the cost of capital is one factor here, but sort of a second order that Will, I think, did a good job of laying out is the intent here. The specific reason they're doing this is to raise unemployment, which is, when you say it out loud, crazy, but that's just how this works. So the jobs that Will is talking about, the point is to put less money into people's hands to spend so that the inflation rate goes down. And that will impact a lot of tech companies. We've already seen a lot of tech layoffs and hiring slowdowns. So that's also a factor for crypto, because obviously we rely on people having a little bit of extra income to engage in, some speculative investing, or perhaps you would call it something else. And so there is a factor there too that impacts us.